So what is market structure? Market structure is exactly what it sounds like. It's the structure in which the market's trending. There's bullish market structure. For an example, here we go in the 30-minute time frame right here. We have bullish market structure. So why do we know this is bullish market structure? As we see right here, notice how we make a higher low. So we make a higher low right here. We also make a higher high in relation to this high, and the higher low we made in relation to this low here. So therefore, now we start to get a market structure shift. Why do we get a market structure shift? On this following candle right here, this 11 o'clock candle, because we finally have a body close above this high. So following up here, what do? Ultimately come back and test this order block, and we make another higher low. So right here, we can see clearly, clear as day, price is in a uptrend based on a 30-minute time frame. Now let's actually zoom out a bit. Let's go to the 4-hour. So if we were to go to the 4-hour, we can see overall price on the higher time frames is actually in a downtrend. How do we know this? Well, notice right here, ultimately we get a liquidity grab at this level. At this level, we ultimately just grab liquidity with this candle here on Sunday, July 30th. Ultimately, what follows through after this, we now get a break of market structure to the downside right here. How do we know that? Because we now made a lower low. So if we come here in relation to this low right here, we just made a lower low. Why do we make a lower low? Because we got a body close through this low down here. And as well, what ultimately happened down here, we made a lower high. So because we see the market structure shift to the downside, we also see the liquidity grab. We now have pretty much confirmation that trend, this uptrend here, is now going back to the downside. We know this. We don't think that, we know this. We can just physically see it in the chart. So based on that, ultimately our conviction needs to be, where is an imbalance and where are we looking to take price back down? Why is that? Because the higher time frames are all trending down. So if we look here, we have this imbalance right here. So if we go back to this lower time frame now, back to the 30-minute, our job essentially is to sit here and be patient and wait for the higher time frame trend. So as we can see here on the 30-minute, trend is up, trend is up, trend is up. So our job is to say, where would we like to find an entry to bring price back down to the overall trend, which is currently down, trend down. So ultimately, looking here, we set up our short position, put that down here. Our first price target's right here. And then essentially I'd look for price to ultimately come down and take out this liquidity down here and fill out this imbalance as well. So ultimately, I'll set our price target like this and let the trade play out. So right here, we literally got perfectly wicked in, or damn near close to it. I really should have found the CE of this. So my entry right here would be at 50% of this fair value gap down here. So that'd be the CE essentially. I'd still put our stop a little wide above this most recent fair value gap, just to where we don't get wicked out, to confirm that, hey, we're gonna get paid for our trade. Now at this point, play this out, let trend come through. So we get pushed back up. Notice how we're starting to get more inducements. And like I said, that's why I said, keep a wider stop loss to make sure we don't get stopped out. Price ultimately just pushed into this liquidity on a lower time frame, probably about 15-minute liquidity grab, and came back down. So at this point, like we said, the higher time frame trend is bearish. So because of that, our job ultimately is to wait and sit here till price comes back to an imbalance for us to take price back down. We don't want to look for a reversal until we see a clear reversal signal, and we'll get into that. So let's let this trade play out, and boom, hit our price target. Ultimately come into this imbalance, buyers start to step in. So if that helped, please leave a comment, let me know. So let's go into some more examples here. Right now, trend is still currently down. What are we looking for? Ultimately for price to come back into an imbalance, bring price back down. Here we go. Price came back ultimately to this break of market structure here. We may even come back into this order block, but ultimately, like I said, hey, we're looking to bring price back down. Why is that? Because trend is down. So essentially, I'd want to bring price, or at least get a discount for our entry. So there we go. We have that order block as well. We also have that imbalance up here. So I'm going to put that stop a little bit wider and bring price back down. So we have more liquidity down here to the downside. Like I said, trend is down. Everything is down. We do not want to fight trend. We don't want to fight market structure. So here we go. Another example right here. We managed to end up breaking this low or creating a lower low in relation to this low right here. And then as well, something that comes up is we ultimately created a equal low as well. So equal lows are a very strong form of liquidity. We'll talk about that in a future video. But with these equal lows, you will see very often in times retail traders think, oh my goodness, double bottom, triple bottom, this will get swept. Just be patient. So right here we have equal lows. What does price do? Ultimately just comes back into this imbalance. Notice how we have here this one, we have this breaker block, two, we have this fair value gap. So notice the amount of confluences we have to where price will likely reject back down into continuation of trend based on this imbalance. So next, what do we see here? Yes, we do create a higher high based on the lower time frame, but in order for us to be bullish on any other higher time frame trend, something has to happen. What's that something? This high up here would have to get taken out. Why would this high up here have to get taken out? Well, let's go to a higher time frame here. So what would that do? Notice how here on the daily time frame, if this high was to get taken out, we would start a bullish structure shift on the daily time frame. So therefore, until this high gets taken out, our job is to short it, short it, short it. And there we go. Ultimately, we hit our price target. Notice how we said, where do we want our entry? Price came back into this imbalance, came back down. Ultimately, do not fight the trend. Be patient. Look at the higher time frame. What's the higher time frame doing? So if the higher time frames are all bearish with a series of lower highs, lower lows, lower highs, lower lows, why are you trying to fight the trend? Ultimately, be patient. That's our job as traders. Our job as traders is to be patient. We do not have impulses to go chase the trend. No, let the market come back to a level in which you feel comfortable to bring price back into trend continuation. That's our job as a trader. Our job is not to perceive the market and just jump in a trade because the market's up. If the higher time frame is down, be patient. Price will offer an opportunity for you to get in the trade. It will. I know what you're thinking, but what if there's a reversal on the higher time frame? How do I know that trend is now starting to shift to the upside? First and foremost, the biggest thing for me is liquidity needs to be taken on a higher time frame. So in this current example right here we have for NQ, notice here on daily, yes, we do take this liquidity level down here, but we do get this body close through it. So there's something else that we need to look for. Now we need to look on the higher time frame. What's the higher time frame doing? What do we see here? Oh, look what we have here. A lovely order block. I love order blocks. I love them. I love them. I love them. I will teach you guys about these in a future video, but for today's instance, notice how on the daily time frame, ultimately price just comes back in to touch this order block. So because of that, now we can potentially look for reversal signals. And as well, it's a weekly order block. So because we're trading the daily time frame or even the 4-hour time frame, and price is respecting a weekly order block, do you see the magnitude of that? Therefore, coming down on the weekly time frame, notice what's starting to happen on the lower time frame. Something that I love, trend lines, trend lines, trend lines. And why do I love trend lines? Because hey, they just tell you what trend is. They tell you when trend is starting to reverse. So based on the lower time frame, on a 3-hour time frame right here, we start to see trend is starting to reverse to the upside. How do we know this? Well, let's go back. It's the basics of market structure. Remember what we talked about. Market structure is the basics of all trading. It's like the fundamentals of all trading. Think of it as like basketball, for an example. When you first learn basketball, your coach is telling you, hey, we're going to teach you how to learn to dribble with your left hand first and then your right hand. But oftentimes you want to learn how to do the flashy moves behind the back, but guess what? You need to learn how to dribble with both of your hands first before you're able to progress to that. So same concept with market structure. Learn the basics of all technical trading and then expand into other things. So here we go. We have this break of market structure here. Why do we have this break of market structure? Because we get a body close over this high here. So right now we just created a new higher high with this wick up here. And then as well, what also just happened? We just created a higher low. How do we know it's a higher low? Well, notice where price came from and notice how price created a higher low. It pivoted to the upside instead of taking out this low down here. So because of this and because of the weekly order block, remember what we talked about, now we can potentially look for that reversal signal. So let's play this out some more. Notice how now we're starting to come trend up to this liquidity level up here. And as well, we also closed back above over this daily level liquidity that we had here. So now currently looks like we're trending up to this new liquidity level. And something that I say always talk about is notice notice how we have the body close above this. So therefore, we now have a new break of market structure and a new higher high. So now our job is, okay, if trend is currently still trending up, essentially our job is to say, where is the dip and where can we look to take continuation to potentially even target up here. And I will talk more about these concepts in the future. We will talk more about using optimal trade entries and things like that in the future. So with me, I would put this entry down here to come back into this discount range. I love discount ranges. I will teach you more about those in a future video as well. So basically, we have this push up, we get this break of market structure. Our job is not to snipe the bottoms. We don't care about sniping the bottoms. The only thing that is just the ego thing, because at the end of the day, our job as traders is just to make money. That's what we're here for. We don't care about, oh, I sniped the exact bottom, got 100 ticks. Who cares? As long as you see an opportunity to make money, let's execute. So ideally, we want to see a pullback here. I'd want to pull back to discount. Well, didn't even get a pullback to discount. So now I would say, okay, cool. Where's our second best spot for an entry? Like we said, trend is still up. Everything is still up, 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 up. So our focus is to find the dip whenever the opportunity comes. So right now, it looks like we potentially may have the dip opportunity to bring price back up. Let's see where price is respected. Here we go. We're holding a 786. So essentially, that's where I'd want to take my entry. Came back to this imbalance down here. As long as we see no body close below that imbalance, where's price likely to head up? Back up top. So I'm gonna put a wider stop loss. Good risk to reward here, 5.56. Let's see how this plays out. So buyers do start to step in at that imbalance, and ultimately we get this push up exactly to our price target. Why is that? Because we are trading ultimately with the trend. We are not fighting the trend. We came from a weekly order block based on a daily time frame. Do you see the difference in the magnitude? Think of like a tug of war pretty much. The weekly time frame has much more strength than a daily time frame. So based on that alone, we know that buyers are very, very likely to step in at this level. If you find this video useful, please drop a comment, like, and subscribe, and I'll see you guys in my next one.